Okay, so I'm gonna start doing a little testing of trading. I'm gonna try to act like you guys aren't there. It's a little rough, first time me really doing something like this, so bear with me here. We have right now the British pound against the Japanese yen, and we're just gonna look at the swing points and try to make sense of the market. Is a top-down analysis. I got to keep practicing it because for some reason I can do great on these larger time frames, but once we start getting into the smaller, little minute situations, it gets a little dicey. Okay, so we're on a 1 month. I don't want to be all back here, back in 2009. I feel like that's kind of stupid. But we do have this big like leg here, and I want to concentrate on that. So we're gonna roll. All right, red, it means that it's bearish or going down. Green means it's bullish. So we're starting a bullish trend. Oh, this one. All right, so we kind of failed to make a new low, and then we instantly retrace back up. And then as soon as we break out of this range here, or break out of this structure rather, um, now we can look at the protected low, which is the low right after you made a high, basically. So you make this high, this low fails to break this low, and then we break the high. So that means this is the low that's protected because it's the high right before it broke to the lower side is a low. I know that may sound a little crazy, but the more I explain it, the more it helps me retain it. Okay, so it's basically, oh, I have my notes. Hold on. I got my notes. So it's basically when we're in a bullish trend, and my pen just dropped. Um, it's saying the last high that created the low is broken. The last high that created a low gets broken. Okay, so we got low, high, low, higher high breaks it. Boom. This is now the protected low, and I can add this right there. Now we break with this candlestick. I don't count the wick, some people do. Candlestick closure after that break. And then, so we have this low that's definitely easy to spot. Boom. Which means this is our high that was broken. So we got a high, a low. It breaks, candle wick. That's a protected low. Protected low. So now we have another high that was broken right here, candlestick to that low. And now we run up, break it. And now we got this high. My crosshairs got all in the way of that thing. Okay, that high. So this high created a low. And now we're getting into the smaller ranges, starting to shrivel up a little bit. Now they say ranges are large in the beginning, but then once you start to see it like get smaller and smaller, it's a chance of a reversal, or you can count them too. So we got this up, down move is one, up, down move two, up, three, four. They say about 4 to 6 swings you can look for a retracement. So we're at four, and this may be a retracement. This is four. This is going to be five. This little one broke there, which means that little guy let's see where I'm at. So 1 swing, 2 swings, 3 swings, 4, 5, and then this is 6. And as you can see on this 6th swing, it came up and it failed to take out that high. So something to be looking out for. That once this is broken, we can be looking to go to the downside. I'm iffy on this area right here. It's too short. Let me take an image of that because hold on. I'm going to take an image of this and I'm going to ask some questions on this because I don't know. No border. There we go. That's what I wanted. All right. I want a border. I don't want anything in there. And I need this to be a little brighter. And then let me draw some more attention to it, like an arrow. Not that type of arrow. Yeah, this. All right, so my question is, these 2 little swing points, is that counted on this time frame, which is a monthly? I'm not sure, so I need to get some answers on that. Take download the image. Desktop, save. Okay. We can move on. Weekly. All right. So we have all this. We have this whole swing point. I'm going to concentrate where price is, which is up here. So we make the swing point here and then go up higher. So this makes sense more on the weekly and probably the daily. Monthly, probably not, but, and actually we got more in here. Okay, so I'm gonna start here and work my way up. All right, so we got this, and then we break. We got that, doesn't make sense. I'll do this, and then we get a break here, and then we have this. I feel like I'm getting in the weeds on these little joints. Anybody have any suggestions on how to not be in the weeds on these little small moves? Should I just skip that? Like, I see a candle closure, second one. It's a little baby high and it comes down. Or can I just do this? No, because that's still that's a low. There's no way around that. I'm gonna keep it. We break it and then we go higher, because really we don't get a candle close until this big boy. So we get the candle close, and now we are here, and then we come down. I don't really see anything here. I don't really get a closure. Yep, another question. I don't really see a closure right there. Like a yeah, so we got this. I guess you would have to skip it. I don't like skip. That don't make sense. That candle too damn big to be skipping. Maybe it's hold on. See now you gotta go into the weeds a little bit, you know what I'm saying? Like this is okay. So we got this high, this low, we go up and we create this, which in turn zoom in. Is that a low? Bruh, that's some bull right there. Okay, so we get this little baby, little wick right here. Okay, damn. Okay, boom. All right, so we got one swing, two swings, three. No, because why would it be? It gotta be after. It has to be this right here. This is what it gotta be. It's like the candle comes up, boom, and then yeah, that's weird, bro. I don't get that. Okay, somebody understands that. Holla at your boy, cause I don't. So we get the close. Then we make a high. Okay, now I can zoom back out a little bit. We come back and we're breaking these little lows. And then see, this is where I get confused. Okay. We got a high, low, high, low. A high. I'm gonna readjust that. And then a low. Okay. And then we got a high. Then we got a low. Then we got a high. And then we break all of this. But to me, this is still one range. I don't like. That makes sense. This doesn't. You know what? If the candles disregarded that shit, I'm going to disregard it. This is just one big leg. Just like this. Right up. And then it comes down. It does not break. So we're still in a bullish trend. Comes down. So I'm not even looking at these. It has to break in order to get there. But we can still look at this leg because you can always take trades in there. So let's go. We're on a weekly. Let's go to the daily. Yep. Okay. So now it makes more sense on the daily, but I don't care about this leg here because we're pretty much on this side. So do this, and now. I mean, I got that. Turn that TV off. Turn that TV off. Turn that TV off. Turn that TV off. Mustard. Like, that's my joint right there. All right. Got an up and down. So we got a candle closure. We are going to boom. And now we got a low. See, I can see this. This is beautiful. I can see the lows and I can see the highs. Candle closure, we go up. This where shit gets a little dicey. All these little baby ass candles. Okay, so we get the closure here. This is the high. Boom. And then we make a low. Boom. And then we make a high. Which now I wouldn't really even worry about this because this is irrelevant because we got a high and a low. So now we got the low right here. Yeah, this baby structure, like that's not moving the needle. You can disregard that. And that's your protected low. And then we fail to make another high. Boom. Oh, I get to use the red joint. Okay. Okay. So we failed to make the high. We come down. We don't care about any of these lows right here. Internal structure that doesn't mean nothing on this time frame. We care about this. It breaks and goes lower. And it makes a lower high. All right, so we did this, failed, broke. This is a break of structure. Now we're heading down to the downside. We did this, and we come down here, but we don't make a high, so we can't count that. We count this, and that's a high. Okay, boom. And that's where we're currently at. We broke structure. We broke another low. So this is definitely on the downswing. And really, we're back at our swing point on a higher time frame. Ooh, and hit that 50%. Hit the 50%. This bad boy on a higher time frame, this is coming like that. Hold on. So this is a swing point. We are doing this on a higher time frame. And we're looking to break. Looking to break the highs off of this pullback. Damn, how many pips is that, bro? This on a daily. On the British pound. Good Lord. Okay. This trading game is so crazy, bro. Okay, boom. We ain't even on that hype right now. We're counting swings. So we got 1, 2, 3. 3 swings right now on the downside on the daily. Okay. Let's go to the 1 hour. All right, on the 1 hour, shit is looking a little. This should look like it's starting to flip. This is looking like it is a flip, actually. Yeah, flips are for another day, but it's reversing, and it's reversing from this higher time frame zone right here, and this is where the flip happened. Wow. Okay. So we got this. We're breaking this swing point. Yeah. Boom, and then take it all out and coming up. I'm still working on patterns and all that good stuff, but you can tell that that's a flip. All right. So since we're here, let's start like here. So we broke broke this. Boom. Okay. Now we're starting back here. And we created a high. So now that's a protected high. Let's do this to make it faster. Do this, do that. Back in. Get that. Okay. And then we came down and then we did that. Back in, down. Down. Yeah, because price came back to it. So, I mean, I guess we gotta. And then we have this. Failed to break. It went close to it and then we dropped. And then we broke. Actually, it's that. Huh. And then it's this. You see how we went lower? So we went here. That's our lowest point. That's our highest point. And then we broke. So that's why I changed it. Now this. It didn't break candles all wicks. So that's manipulation. This is a sweep of this low here. And then we come up and we break, which we turn green. And now, since we broke this and then broke this, we're looking for longs. Yeah, that's a baby on a lower time frame, but I'll put it in there. This guy. So we got this up here. And then we have this that broke, but we have something lower, right? So we have this high with this low. And then we break. And then we have that high. Oh, my bad. Doesn't break with a candle. Doesn't break with a candle. So what did I make this a red? That's wrong. Huh. Let me go back and just see why did I put that as a red. High. Okay, not there. Let's go to the week. Not there today. Not there. The 1 hour. It's random. Why did I do that? Had to be on a larger time frame too. So the line is hella long. Okay, I don't know. All right. We're on the, I believe 15. Nope. Yeah, it was on the 1 hour. Okay. So we didn't break it. but we went down lower. So that means we gotta change the high. It's this. It's from here to here. And this is the low. Because it still didn't break any of these lows. Here to here. Here to here. So this swing point is where it's living on the hour. And it's in this swing point or this range. It came in once, came in, boom. Could have made some bread. Came in again. This could take this out, which normally they say the first tap in is a little shorty. And then that second tap in, take your ass to the moon. But so yeah, so this is where we're currently at. And this is a strong ass damn candle. Okay. So yeah, that's where we're at here. This is on the 1 hour. Boom. Take it down a notch. 15 minute. 15 minute. We really don't have much going on here. We're just in this little baby range and nothing to report. So that's the cool thing about top-down analysis. Most of your work is going to be done by the time you get here. So it's like, now you're just fine-tuning. And so if we see like, okay, this was that whole range, but we see this area is what's concentrated in this move up before we broke. So this area, yeah, so it's really this. Boom. Oh, damn. Okay, this is all jacked. Oh, actually, as you can see, I used to do, I'm telling on myself, this is all ICT shit and all that bullshit. Okay, boom. Boom, we're here. So we're in this range. Dave Teaches, who I follow, and this multiple times is getting into this thing, and then boom, takes it out. This bad boy is about to rip, bro. And this is on the 15 minute. Yeah, this is about to rip. So it mitigated this area hella times, and then it went to a unmitigated place, which is this imbalance. Damn, I guess I did learn some stuff. Okay. So yeah, did that. This is the S and I can never say what is this, the S and D R? S and D R. S and D R is, here, I'll write it out for y'all. S and D R is actually pretty cool color contrast. Okay. S and S&DR equals supply, demand, supply, demand. We'll do this. So supply or demand responsible. Don't kill me if I jack that up, but yeah, that's pretty much what it is. The S&D are the supply and demand responsible. I think supply and demand, S&DR, supply demand responsible. I think that's what it is. I could be wrong. Somebody correct me if I'm wrong on that. Supply, S&DR, S&D, S&DR. Supply demand responsible. I may have to look that up. But yeah, anyway, this is the area that's responsible for this break of the high. Comes back in once, twice, 3 times, 4, and then at the 5th time, sweeps it, mitigates an unmitigated area, and then the goal is that thing to rip. Okay, so it's really nothing to see here as far as swings, so we're going to take it down another level. That was a 15, let's go to 5. So we we got some stuff here. Okay, so we're coming down here. So we're at this level. We do have a high. Okay. Okay, so we got this, and which created, damn it. Hey, does TradingView be hella goofy for y'all like this? Sometimes it just be not acting right. Doesn't break the low. Boom, stops. Comes up, and then we're breaking this high. That's the 5. Let's go to the 2. And now what you can just do is just like refine the area of interest where you want to buy or sell. So we broke. Boom. That's a 2. Let's go to the 1. Yeah, that's about right. And for shits and giggles, let's go to 15-second. Oh, my line's not gonna pop up on the seconds joint. Hold on, bro. Hold on. Visible. Yeah, give me these seconds, player. All right. There we go. Yeah, left a little baby point of interest right before it broke. You got one here too. Really, I think it's this, but or this. We'll have to see how price reacts. Yeah, man. So there you go. That is top down for today. GJ, British pound, Japanese yen. Feel free to correct, guide, improve upon, question what I've done, because hey, that's why I'm putting it out here, just for myself to journal and speak this stuff aloud so I can teach myself and be accountable to myself to get this right. Because once you get this market structure right, I mean, see, we had this break here. Once you get this market structure right, I mean, it's little things. You can just deke and dunk into this market with no issues. Boom. Take it right there. Take that thing down. And you could have just trailed your stuff. Comes up, comes out, boom. Comes back, retest it, and then leave. And then once you get a break, you can just trail on all these big ass candles. And you don't get a trail back. Like you would have got stopped out somewhere around here. What that look like? Love and affection. That's what it looks like. All right. All right, guys. Until next time.